Friends, in this video for I Thought Wealth, I am going to talk to you on the topic Nifty obsession versus asset allocation. A rising Nifty creates a lot of anxiety. Everybody wants to beat it. So, as the Nifty rises, more people want to participate in the Nifty's rise, or they want to measure their participation in the market against the Nifty's rise. But the broader market and Nifty are not always going to be in tandem. So, if you are used to buying companies which are micro caps or small caps or mid caps, your racing against the Nifty is quite useless. The reason is that there are times when these companies perform better than the Nifty, and there are times when only the Nifty performs. If you look at what happened in 2020, the Nifty was the spectacular performer for a very long time. It was only later that the performance spread to the broader market. Even as the performance spread to the broader market, people were still obsessed about the Nifty. This is not unusual given that this is the first bull market in which indexing has played a major role. Both the FIIs and domestic investors have taken to indexing in a big way. For FIIs, indexing is a very convenient way of investing in India. Their need for diversification is easily met. On the other hand, amongst domestic investors, the most important indexing influence comes from your pension funds, EPFO, and from the online rise of investors and first timers. So, it's a new thing for the domestic audience to be playing such a significant role moving the indices. When you have both domestic and foreign participation in the same direction, you are going to see the valuations move faster. If you look at the other parts of the market and the recent history in those parts, whenever FII sold, domestic bought, and whenever domestic sold, FII bought. But in this post-COVID rally, both FIIs and domestic retail participants and pension funds, both domestic and foreign participants went the same direction on the Nifty. That's broadly why the Nifty has shown such a spectacular performance. Now, if you look at the valuation of the Nifty with relation to this performance, you cannot find a meaningful correlation which you can connect to the past, the present, or the future. Clearly, the Nifty has run ahead of its fundamentals. For earnings to justify that, we need to have a massive catch up in the shortest possible time. While the earnings will catch up, the variable which I believe is going to work against that is time. It will take more time than the markets can wait, and it will take more time than the markets expect. So, this is what makes the Nifty look vulnerable. And this is where that obsession with the Nifty seems a bit creative and overstretched. On the other hand, the alternative to an asset class when the valuations are very high is arrived at best by applying the principles of asset allocation. So, if you find equity to be very expensive or not lucrative, then you have to move towards other asset classes for diversification, and you need to put money into those asset classes where you are relatively safer on the valuation front. Here again, there has been a very interesting problem. Interest rates are low, debt seems to be fetching less than inflation or barely fetching whatever is the official inflation. Real terms, money may be losing value. This again has made people ignore the importance of asset allocation and think that the money they would otherwise earn in debt, they can easily earn by doing indexing. Now, this is an completely outrageous expectation, because the reason you should go to debt is because of the valuation of the Nifty. On the other hand, what you are doing is going to the Nifty itself to make up for the poor returns in debt. Now, clearly from a risk construct, you are just letting your risk soar. As somebody who is investing to gold, somebody who has responsibilities to fulfill, financial needs that keep coming up over the next several years in regular intervals, you are setting yourself up for a risk-taking approach which may hurt you, in the sense when you need to fulfill your responsibility, your money may not be ready and the Nifty may be lower than the level at which you bought. So, the question of earning itself becomes suspect and you are actually facing notional losses. This is not new, but given the fact that more people are overconfident and more people are ignoring asset allocation, I expect that more people will be hurt by this tendency. So, it is very important that one should lower his Nifty obsession and focus on asset allocation today, so that whenever markets correct sharply, we will be in a position to take advantage of that and we would not be hurt too much by that correction. It's very important that you control future damage so that you are able to exploit future opportunities. So, in that sense, unless you do asset allocation in times when equity valuations and specifically Nifty valuations are out of whack, you will put yourself to risks in the future which you don't want to face. So, in that sense, I find that the Nifty obsession is overdone. It is definitely our responsibility and duty to our financial well-being to follow asset allocation now and to increasingly focus on reducing the risks from concentrated ownership of equity. So, in that sense, saying the Nifty is a cool asset class to own and there won't be any problem is trivializing the risks that the lack of asset allocation can put on us. So, it is very important now to reduce our Nifty obsession and improve our asset allocation. If you like this video, I would request you to share it with your friends who are both Nifty fans and those who need to know about asset allocation. Do stay the journey with us and we'd love to have you with you watching all our videos and participating in all our programs. Thank you for following our channel. Stay the course with us. Thank you.